welcome back to this Wealth edition of Money Makers. It's certainly been a tough year for share market investors, with losses not seen on the market since the crash of 1987.
But the recovery phase may be here sooner than you think. Bourse Communications has reintroduced an old favourite, the old investment clock, and we're joined now by Rod North from Bourse to talk us through this wonderful old investment tool, mate. Why don't you explain to us what exactly the investment clock is,
Well, the
Rod?
investment clock first came out in 1937 in the London's Evening Standard, and it sort of had a bit of a hit back then in 1937, and I think it got reinvented again. I started in broking back in the 1980s and had another look at it then, and what we've seen is that it's been very accurate in predicting largely where market cycles are going to move over, you know, fairly significant periods of time. Sometimes the cycles can run from sort of 6 years through to 11 years, but it actually moves through a period of cycles and through the hands of the clock. And we've seen, particularly in the last 12 months, you know, a significant move from sort of the boom, you know, through to, you know, what we're seeing now as a bit of a recessionary period.
Well, why don't we pull the clock up? We've got a slide here of the marvellous old thing. Now, here we see a whole lot of times, and we can't actually read it as well as we can, but the key things is the green area is the boom.
Absolutely.
The yellow's a slow down, red's recession, and yellow's recovery. And so the time will give us an idea of whether we're closer to a recovery or still in a recession. So where do you think the handle should be?
Well, I think we should be around about 4.30, and one of the things that we've seen is that we did start to see commodity prices start to fall, and we're moving towards a period of tighter money. There's no doubt about that. Capital has been very difficult for a lot of companies to get, and, you know, despite the fact a lot of real estate agents keep talking the market up, you know, we're probably going to see a few further falls in real estate, which will bring us through to 6.
So in a sense, you've got us halfway through a recession phase.
Yes.
Now, does this apply to a global economy or specifically the Australian economy, or
well,
what?
actually, I think it has a global application because if you look at it, if you go back to sort of 12 o'clock there, when we were at the peak of the boom, you know, that equally applied, you know, in the US as well as it has here. And we've really seen the market fall very substantially. I mean, most stocks have fallen anywhere between 40 and 60%, but that's happened in 12 months.
I guess there's a reasonable argument to bring up here because, you know, we know Wall Street leads us every morning, just about every morning of our life. If Wall Street's up 500 points, you can bet we're going to go up to a factor similar to them. Now, therefore, the investment clock must reflect strongly the US and global market outcomes.
I think very much we're still very connected to what happens in the US, Peter, and as you say, I mean, the Dow's looking very much as if it could test the 9,000, our market's looking as if it could test the 4,000, but the key thing is that a lot of people think that the market has only really just fallen. If we're looking at the share market has fallen for over 12 months. We're almost 12 months since the market.
So remind us of the history of bear markets. How long do they usually go for?
Well, bear markets generally can run for anywhere between 12 months to 2 to 3 years.
Okay, after the 87 crash, how long did they go for?
It took about 20 months, and we saw a 20 to 25% increase. And the average is often a retracement of about 20 to 25%.
So Rod, given what you're saying and what our previous guest was saying, I'm kind of hoping that you're more right than he is, because I think you're sort of suggesting that the recession may go for another 6 months, or that recession phase or the bear market phase might go for another 6 months or so.
Well, I think there's still a bit of collateral damage because there's going to be a fair bit of fallout, you know, from what's happened, you know, both in a global sense and also in Australia. Unemployment's going to be under a bit of pressure, and I think as a result of that, yes, 6 to 12 months, recovery sometime 2009 towards 2010.
Well, you know, you've watched markets most of your business life. Once we get an idea that the recession is getting towards the last 6 months, the stock market usually tries to jump in to you know, cash in on the fact there's 6 months to go.
Absolutely, and I think that's one of the things that people often forget, that largely there's a time to be in shares and there's a time to be out of them. And now's probably a time to start and have a good look at them, because we're seeing companies come back to, you know, yields of 7%. We're seeing companies with PEs coming under 10. And they're all the sort of measures that investors should be looking at in terms of, you know, when to buy. But you'd probably start to buy selectively. You wouldn't be putting all your money into the market at the moment.
Do you think, or are you surprised that the Aussie economy, given its relative strength compared to other economies, that our stock market in a sense has been probably bashed and hit harder than it really should have?
Yeah, I think we all got a bit of a shock at how badly our market got hit, because we were all believing that, particularly with the resource side of Australia, you know, being very much in favour because of the demand from India and China, that we would be insulated. But I think it just shows you that we're still very connected with what happens on a world scale. Australia, you know, becomes very much part of that.
No, mate, we're out of time, unfortunately. I could talk to you all night, but people want to know more about your operation and your thoughts on the matter. Where do they go to?
Perhaps they could just email me at info@bourse-communications.com.au.
Mate, thanks for joining us on Moneymakers.
Thanks, Peter. Thanks for having me.
Yes, Rod says it's 4:30 p.m. on the investment clock. Okay, a look now at our funds management segment. And today